Hey guys, Mike here. So we finally finished out the month of July, and so we're going to start into August. Obviously, August is a whole different ball game than July, okay? And understand what I always say, when we're in a bear market, the market's trending down, you want to pay close attention to what the perma bears are saying. If these certain perma bears, I'm talking about perma bears that have been right and calling the market start to come down, right? There's a couple last year. And when you see them pivot, that's when you want to raise your eyebrows up and say, wait a minute, what they just say? They think we're going up from here? And it's the opposite is true when we're trending up. You want to find yourself some perma bulls that, actually have been right on a couple calls, right? And so we're going to talk about one today because Tom Lee came out and he's admittedly a perma bull and he had a warning for his own clients coming into the month of August. So I'm going to show that to you because I think you need to be aware of it. And there's some other financial data that dropped today that I've been waiting for it to drop that we need to watch carefully. And then I'm going to show you, boy, today was all about high beta stuff. Okay, we had some earnings come out. Some stocks just blew up anyway, but people were just loading into high beta stocks, okay? And if you look at this right, I've been waiting for this to come out for a while. This is what we need to make sure, pay close attention to, and understand when I say we, that means me. So I'll tell you about this, but this is the measures of supply and demand for commercial and industrial loans, right? Liquidity into the market, okay? And so you see the dark line is loans to large and middle market firms. The dotted line is for the small firms. They don't always coincide, but they sure are now. And this was looking like it was going to turn over, and then it started to head back up, all right? And on this chart, when it's heading up, that means they're tightening standards as far as lending and stuff, okay? Now understand, we still hadn't even crossed the dot-com bubble threshold, the late 80s, early 90s threshold. We had a crash. And so, and above that, you're going to see the 2021, and then there's the financial crisis, which I won't think we would meet that one anyway. But again, let's see if we actually reach the other threshold or keep going up and these standards keep tightening. You would think that would be the case. Now, this one's flipped a little opposite. This is U.S. bank tightening standards versus non-financial corporate capital expenditure, so capex here. And so you can see they pretty much go hand in hand. So as the black line's coming down, that is actually going to tell you that's the capex, okay? And then of course the other line is the large and medium size bank loans, and then as far as how they're tightening, so it's the opposite. So as that line's going down, they're tightening, and you can see capex right there. They kind of go hand in hand. And so right now you can see capex is going down along with the lending standards. The other thing to watch out for this is going to be with the bond market when it comes to buybacks by all the different companies. Apple will continue to do it because they have just boatloads of cash, right? But for a lot of companies, they took out cheap debt because interest rates are almost to zero just to buy back their stock. We'll see how that's going to affect things. Right now, you're just on this crazy rally. It's not a buyback thing. It's pushing it up right now. So we'll have to see if these rates stay higher for longer, how that's going to affect it. Because that was, I think it was like 8 to 10% of the returns going from like 2010 to 2022. And so keep that in mind. Another one to watch out for is XLE because it had a big pop today. And understand, usually this 200 moving average right here, you can see on here where that was resistance. And then it rejected, finally broke through, came back, retested that 200, and now popped and gapped up. And so this one's starting to trend up. And you can see why I had that pop today because all those oil stocks were moving today. Now, keep in mind, if you look at oil, what do you see here? You see the 50s trying to curl up to cross over that 200. The 200 was resistance, right? You see it multiple times get rejected, 3 times right there, just since October last year. And then finally it broke through this last week. So keep this in mind. Plus, if that 50 does cross the 100, that's always bullish for anything, okay? And you can see it can be one of those right there where you get a run, or it can be a fake out, right? Where it just kind of trades sideways and does nothing. And of course, what would that have an effect on? It's going to have an effect on a bunch of things if oil starts to go up. And you can see this right here is diesel, right? For gases that controls everything, all the transports and everything. And you can see we're still not back down to where the average was even pre-pandemic. And you can see, obviously, in October, started to drop off a cliff. At the bottom there, as we start narrowing it down from year to date, 6 month and all that, it's starting to curve back up. And so this is something we just got to keep an eye on. Doesn't mean it's going to keep going or anything like that. But if the economy's strong and all of a sudden you're getting this demand, then yes, it's going to spike back up. As far as how we're concerned, this is what we're paying for. You can see we're still not down to pre-pandemic levels, which is below 3. And so, again, if it seems expensive, it is because since year to date, it's been going up, right? And as we start to scroll through here, you can see what I'm talking about since January. it continues to go up. And so obviously it will definitely upset a lot of people if gas continues to go up. Now, when you look at some stuff that obviously can boost it, we talked about this, the US dollar still seems weak, right? And so we still got to watch that. That will absolutely boost earnings. And so keep that in mind. The other thing that came out yesterday is household net worth, right? It was dipping down. And then all of a sudden, bam, it's starting to pop back up now. Why? Because everybody's 401ks, IRAs, their houses, everything that appreciates is going back up. Okay. And they're also earning money on their savings and stuff. And so this continues to move. And mind you, that top line is 150 trillion. The one right below is 100 trillion. And we're sitting at 141 trillion in net worth. Now, I find this to be skewed, I'm sure, because you'll have your, really, really rich people in this that can skew the heck out of it. And guys, before we continue, if you get anything out of this, please hit that thumbs up down there. I really appreciate it. And if you like the material here and the videos, think about subscribing. But it is something that is helping to bolster this economy we're in, right? And to keep the stock market going. So you just got to keep those things in mind. We'll keep them on watch and stuff because, yeah, if oil starts to break out, if natural gas all of a sudden starts to break out, then it's not going to be good for inflationary purposes, okay? And that could explain why the Fed, another reason why they're trying to stay tightening, because they know inflation just doesn't come down in a straight line, or at least it never has. And so we'll see if that's the case or not. Now, when you look at high beta stuff today, that's what it was all about, baby. And when you look over here, you got the shops, the Teladocs, Roku, Upworks, Mara, Coin, Pinterest, Roblox, Unity, Palantir, huge day, almost 12% up. Datadog, see all the Chinese stocks still riding that stuff, besides XPEV, XP that is. It got nuked 11% today after a big move. But there's your garbage. Workhorse up 14%. Nickel is up huge, right? SOFI, huge day, which we'll get into as well. And you can just see on the calls here, look at this. High beta, SOFI, 2.5 times as many calls as was puts. Palantir, about 3 times as many calls as was puts. Roku, twice as many calls. Fubo, for crying out loud, almost 8 times as many calls as puts. And so this is all about these beaten down stocks that have been basing for long periods of time, not getting a lot of love, a lot of rotation in them. And you can see SoFi, obviously they popped because they had earnings this morning for the bell open. They raised their guidance, had a double beat, top and bottom line. And so you can see it came out of this stage one, retested it twice where it had been consolidating at, around that $8 range. Big pop up. And with this one right here, you can see it getting above that volume node. Now this one, 14 right there, seems to be a good target, at least first target that is, and before you start really hit any kind of major resistance, just because, and this is a daily chart, because of the way it traded, right? IPO skyrocketed right up, stayed above 14 all the way going into 2022, and then just got crushed, like all the rest of these kind of stocks did. And this is a SPAC stock, so it usually has a big market cap because there's a lot of shares out there on it and stuff. But again, fintechs have been on fire. It's not just SoFi, it's PayPal, Square, Upstart, all of them. So no matter what their business model is, it seems. And we'll see, right here, this I'm looking for a third touch on this trend line right here, which would kind of coincide because it's not going to go straight up. So it'll kind of coincide between 1450, somewhere in there. So just keep that in mind, as well. And so we'll see where this goes from here. And you can see, obviously, what was helping the boost, right? Look at all the calls. I got some of these myself for January 19, 2024, and they were just picking them up like hotcakes and stuff. So, again, people were trying not to time this one maybe. They're saying, okay, let me get a little bit of time to see where this one goes. And so that's what helped it. Then you got Palantir, huge bump up, end up gapping up into that range again, which we talked about a few weeks ago and stuff. Again, still can't break 20. That's a big psychological level and stuff. You can see it still has room to run over there on that volume gap and stuff, up to about 24 until it really does start to hit resistance and stuff. And again, this was a weekly chart. So, we'll see because, that is a huge run up. You can see what happened. Once it got in that volume gap, it just rocketed, right? And as I showed you, look at all the calls that people were piling into today, right? Help them push this one up. And so let's see if it can finally break above that 20, which has not been above in over a year. So just keep that in mind. Plus it has earnings coming up Monday, August 7th. And then we're going to have AMD, right? We got earnings this week. And what's this one doing? Still sitting there right below that 50. Now the 50 is resistance, not support. But again, you got that trend line between that $9 to $11 range right there. Is really great support. But again, if we go down to the hourly, you see what I'm talking about with the 50, trying to get back above it, turn that back into support. It's been rejected once, twice, 3 times. So we'll see if tomorrow is going to be a fourth or not. And this was another one people were loading calls on because of obviously the earnings and stuff. And these were call sweeps, anywhere from 115. They're pretty short dated. So, you know, they were just loading up. So just a boatload of them coming across all day long, people making their bets and stuff. Now, Tesla, again, still looking at these levels. I'm going to go back and relabel some of these, but you can see not much today at all. It's really just kind of flat. Right, just consolidating right there on that volume node and stuff. But again, I'm looking for it to break 268, close above it, try to get above the prior week's high, which is sitting around 273. If that doesn't happen and it gets rejected, obviously I'm looking, this will be last week's low, around 254. And I hadn't seen a whole bunch of call volume coming through for this one yet, but I hadn't seen a whole bunch of put volume coming through. So that's the thing you got to keep in mind with Tesla. Now, BABA obviously still riding high with Chinese stimulus, even though when you read more about it, it just seems like a hot mess over there. But it doesn't really seem to matter with this one. I mean, when you look at it, again, this is one of those ones, it went up super fast, it came down super fast. Just look at that huge volume gap right there. And so, you know, you can see this one definitely getting to 105 is going to be the next one you want to break, but then going to 120 is really your main target there before you start to either try to hit maybe a little resistance in there right there. But if it breaks 120, then watch out. But again, this is all based on stimulus, not fundamentals. They do have earnings coming up not too long from now, actually. So just keep that in mind. And now that leads me to Tom Lee, because like I said, anytime you got to be able to identify these guys, man. Like last year it was Mike Wilson and one of the gentlemen I was showing you that was making good calls in the bear market, right? And then eventually they go wrong. And then here comes your perma bulls coming in, making the good calls. But when they give you a warning saying, hey, guess what? I want to pay attention here, and they start putting these letters out to their clients, I think it's just something to be aware of, right? And when you look, I was kind of surprised to actually see this today, but it says investors should brace for an August stock market slump. Tom Lee warns. And if we go in here, what he's talking about, he goes on to say in his latest note to his clients on Monday that investors should be wary of market pullback in August given historical performance trends and the already stretched nature of the market's 2023 performance, which we've talked about. Since 1950, the average return for the month of August has been just 0.01%, making it one of the worst months for stock market returns. During that period, the win ratio for the month has been only 55%, which is low. When stocks fall in August, the average drawdown is 3.2%. That would imply roughly 150 points on the downside for the S&P 500. Then he goes on to tell his clients, so it seems that the stronger the year, the worse the August risk. What does this mean? It means one needs to respect the negative seasonal going into August, Lee said in a note to clients. Moreover, as I mentioned, it does seem like many investors tend to be wary of the month, which obviously does not help the situation out. And the other thing to keep in mind is September isn't any better. Okay, so we just got to see how this is going to work out because you'll have, you know, seasonality for presidential elections, and then you're going to have regular seasonality. But again, the part where he talked about being overstretched doesn't help the situation. Well, that makes sense. I think everybody keeps expecting this pullback to the 50 at some point in time. We've gone over that kind of data as well, so you shouldn't be surprised. But just to hear him warning his clients, obviously, just take note of it. Doesn't mean it's going to happen. All right, doesn't mean it's going to happen. But I always say pay close attention to stuff like that. Now, earnings, obviously, we're sitting here, boatload tomorrow again, right? Norwegian, Uber, Pfizer, Caterpillar, JetBlue, then the big boys, AMD, Devon, Starbucks, and you got Pinterest, MicroStrategies, Elf, which has just been on a freaking tear. And then when it comes to financial data, you're going to have a lot of S&P, global manufacturing, ISM manufacturing, which people are going to pay attention to, the JOLTS job openings and quits report, the Dallas Fed Services Index. And when you combine all of that data, obviously, especially with some of those earnings, yeah, I mean, you can see we're starting a fresh month, right? The indexes are up, 3% for the month. They're up massive for the year so far. Definitely overstretched. Even Tom Lee saying it, not just me. Okay, I'm not a perma bull or a perma bear, but I try to stay in the middle on this and just follow the data. But it would make sense, right, for at least some kind of pullback. So have your list of stocks ready, guys. I'm telling you, look for those sectors that are starting to really catch a bid, that aren't 300% up and all this crazy mess, because they're out there. Look at where big money is starting to rotate into. All of a sudden, oil stocks are starting to get another bid now, right, over the last 30 days. You got fintech is hot, but I mean, if you really look at the charts, man, they got nowhere to go but up, really, if you kind of think about it. I'm being kind of smart out when I say that, but software stock, cybersecurity, and then there's others that are just really have run up so much. You just got to figure at some point in time, especially when the big boys know seasonality takes effect, right? When they start taking profits and all those names, which they've been doing slowly, right? Where are they going to rotate those profits into? They're not going to just pull out of all those big names, those big seven, the Magnificent Seven. That's not going to happen. They're just going to take profits and keep trying to rotate that money somewhere else because there's somewhere else to go. Look at what the Russell did today. Closed out a lot stronger than the other ones did, right? If it wasn't for that last 12 minutes, I believe it was, from 348 to close, the NASDAQ and the SPY would have been red, right? But the Russell's green all day. And it did. I think it broke over a crucial level. I think it's a new 52-week high. I'm going to go back and look at that, but I think that's what I saw today. So just keep that in mind, right? I mean, and if you think if you think the economic strength is going to continue, then why wouldn't energy do well? Why wouldn't the small caps do well? That's what you think, right? Now, of course, if the economic data continues to move up, that was obviously going to force the Fed to do what? To probably keep raising, okay? And again, what's the old saying? The Fed just keeps raising until they break something. That's what they've done in the past, and so until that pattern is broken, that's probably going to be the case. When that's going to happen, who knows? That's what you got to try to figure out and stuff. I mean, I read a stat today. It was like we're paying $150 billion on interest for all the loans we're getting out, but we're also making $121 billion on investments and interest payments and things like that ourselves. So, that's the way it is. And tomorrow I'll talk about a conversation I had with somebody. I was at a late this weekend for 4 days and everything. So just got back today, and it was a great conversation with a small business owner that has a couple of businesses, and we hashed some stuff out and kind of got some ideas. So I'll share that with you tomorrow. So anyway, hope you guys have a good one. Please hit that like and subscribe button if you got anything out of it, and I will see you tomorrow.